Hi, and welcome to today's Midday Market Update, where we keep you informed on the freight markets, what you need to know right now from FreightWaves. My name's Kevin Hill, and today, sitting beside me, I have Andrew Cox. Michael Vincent is out on assignment, deep cover in the freight markets.
Secret agent man.
Secret agent
That's
man
right,
today.
Well, thanks for having me, Kevin. I'm excited to be here with you. We will give everybody a great show. We got a big one lined up, don't we? Got some good guests. We've got coming up at 12:30. We got Ryan Houfek, who is the COO of Direct Chassis Link, and then just after that, we're going to have John Gallagher, who is our chief Washington correspondent. We're going to talk. Oh, sorry about that. We're going to have John Gallagher first, and then Ryan Houfek. We're going to talk to him about the HOS reinstatement from the Fmcsa. But before that, we're going to have, as always.
We're going to hit the headlines from FreightWaves.com to start us off with, and then we'll talk about the freight markets, and they are heating up. They're still hot with Zach Strickland, our Director of Freight Market Intelligence here at FreightWaves, and then our Chief Economist will talk about initial jobless claims, continued jobless claims, and all the economic conditions out there.
And as Vincent always says, this is an interactive show, so bring your comments, questions, anything you got on LinkedIn there. We'll try to get to them as best we can, if they're appropriate, of course. Yeah,
and then we're also gearing up for the Carrier Summit, which is August 19th and 20th, next Wednesday and Thursday here at FreightWaves. So the truckload industry leaders will be talking to everyone. It's a day-and-a-half conference, so we'll talk a little bit about that as we get into the show, but we're excited. Gearing up to have our latest and greatest virtual conference coming around next week.
Another one coming up. It's going to be great. I think we got even an announcement coming up at the end of the show of a new speaker, maybe?
I think we do.
So stay tuned for that for everyone.
Yes.
Everyone looking forward. Do you want to hop onto the news?
Let's hop on the news. What do we have on the top headline on FreightWaves.com, Andrew?
Yeah, so our first two are involving the southern border. The first one is actually something that's a rarefied thing. You have the Teamsters and the Owner-Operators Independent Drivers Association teaming up. They have filed and sent a letter to the U.S. International Trade Commission to investigate whether Mexico-based carriers pose economic harm to the U.S. trucking industry. Todd Spencer, the president of OIDA, said in a release, because Mexico carriers and drivers are not held to the same rigorous U.S. safety standards and regulations, they are endangering the American public and taking away jobs and profits from American drivers and carriers. The two groups, that is the Teamsters and OOIDA, believe that because Mexican trucking companies are not held to the same standards, they're endangering us, and they have requested that officials use provisions in the new USMCA to investigate these Mexican trucking companies. USMCA has been in effect since July 1st, but Mexico as a country has kind of objected to certain provisions in that new deal, which include an interim rule restricting Mexican truckers on U.S. highways and a provision that could cap the number of Mexican carriers that can operate in the U.S. I know you got some thoughts.
I do have some thoughts. I was a freight broker down in Laredo, Texas. I spent some time in that office for about 8 to 10 months back in 2013. And what I found since then is that there's very few Mexican trucking companies who are interested in operating in the U.S. in any kind of wide-scale market. And like with Canadian drivers or Mexican drivers, U.S.-based drivers, if you go to Canada, you're a U.S.-based driver. You go to Canada, you got to get a load back.
Right. You can't take point-to-point loads in Canada.
Point-to-point. I don't think that's going to change under this. And I think, as the article said, and you just mentioned, that there's only about 600 drivers.
Yeah, there was like 60 companies or so that have authority in the U.S. 60 Mexican-based companies with like 600 drivers. So, unless they're doing a lot of point-to-point, they're getting away with point-to-point movements in the U.S., which I don't know if they are. I don't know. It seems like this might be. They're making a big deal out of it, but we'll see if it ends up being a bigger deal than it is.
It's only really a big deal if a lot of Mexican trucking companies and a lot of Mexican drivers come in and start moving loads north of the border. But from my experience, Mexican trucking companies are very hesitant about coming into the U.S. because of that point-to-point. It's very hard for them to find freight coming back, so you're paying really rich premium rates for that uncertainty. So I think and I've also called and mapped out a lot of Mexican trucking companies that have Fmcsa or USDOT numbers, and the scale that can really operate efficiently running cross-border and kind of putting that together is not much more than 60. I mean, I think you have about 95% of the market already operating the way they're going to operate, so I don't really see an expansion.
Yeah, but I mean, everybody in the audience, if you guys have a thought on this, we'd like to know if you guys think it's a big deal. Let us know in the comments below. We'll read them out loud if you think that this is a big deal, if the Teamsters and the owner-operators are making a good move here. But here we got another article about kind of the Mexico border. It's another drug bust. We seemingly get a new one every week. This is a pretty big one. I think it's totaling about $61 million in drugs. So the Border and Customs Patrol announced yesterday that they had seized almost 600 packages of methamphetamine and almost 15,000 pounds of marijuana at the Fmcsa border crossing. Drug traffickers, they really try to hide it in anything. This time it was cacti and limes. On Friday, a big rig arrived at the Fmcsa from Mexico with a shipment of cactus. Border Patrol agents found nearly 700 pounds of methamphetamine worth roughly $1.5 million on the street. And then later that day, officers were inspecting a second truck through the same Fmcsa border crossing, this one hauling limes. In this lime freight, they found nearly 15,000 pounds of marijuana, which was worth almost $60 million on the street. So another really big bust at the border, which we've been on a string of Canadian busts, but this one here's another. This is a Mexican bust this time.
Yeah, cacti. Cacti is an interesting way to hide drugs.
I mean, I've seen it in everything. I've seen it in pineapples. Yeah, it's true. I mean, it's not the worst idea, but it didn't work out for them this time.
Yeah, but that's a pretty common occurrence along the southern border, and that is it. We have a comment here. Julian Romero, transportation specialist. The wait times for these loads coming from Mexico are almost 6 to 7 hours, and that is right. The northbound traffic over the bridge, especially in Laredo, can get 6, 7, 8 hours.
You were saying, you just look and see lines and lines, miles of trucks coming through.
And southbound, it's few and far between.
Yeah, I mean, I would see maybe auto parts headed down south to be configured and then shipped back up. So that would be
imbalance of freight is big. And then Alejandro Rodriguez, B1 cross-border service manager at XPO. B1 visa Mexican drivers help fill the gap of driver capacity in the U.S.
Hey, so he's
if we did not have them, we would be in big trouble, and that's a good point.
Yeah, I'm on Alejandro's side on this one.
A lot of the B1 visa drivers are more local drayage that they don't really get outside the 26-mile or 26-kilometer type of secondary border in both the U.S. and Mexico.
So our next story is a tech company. We have Workhorse. They've been in the news a lot recently because their stock has been on a tear, kind of riding with that electric truck maker bubble that's been going on. But Workhorse actually positions themselves a little bit differently than most. They position themselves as an electric truck maker that is made for final mile, but it also has a truck-mounted drone that will do package delivery. So imagine a van going into a neighborhood, drone coming off of it, going towards a driveway or a back porch, with the drone sitting about 20 feet up in the air and then dropping the package by winch down. So they're doing this to try to avoid the noise. They think that this is probably the best way to do it. But this is a really difficult thing they're doing. They're trying to combine two of the more difficult segments in logistics, last mile and aerospace, together. So it's going to be really difficult. It is doable. In the past 4 years, they've delivered about a couple hundred packages in 3 different states by these Workhorse. Horsefly is the name of the drone. I found that pretty fun. They've had to pivot in the last couple years. They've had to offload some of its more ambitious drone ideas. The former CEO, Steve Burns, invented a VTOL, which is vertical takeoff and landing, which is a two-seater hybrid drone. This was a kind of a bigger project. It was called Surefly. They had some tough times in the early 2019, so they ended up having to sell off that segment. But now they're kind of moving forward with Horsefly, which is their drone delivery. This is going to be their way. And I think it's a really good idea. I think the idea of having drone deliveries from warehouse to neighborhood is just ambitious and kind of crazy. I think we're going to have way too many, basically, gnats flying around. I just see too many problems with dogs and kids and everything else. So I think it makes sense to have a last mile delivery van go into a neighborhood, deliver things while the drones. You kind of get a pretty efficient way to do it there.
Yeah, I have this picture in my head of the last mile vehicle driving through the neighborhood and having drones come back in, kind of like birds, right?
Precisely,
like ravens or things who
Coming
have
back to the
homing
nest.
devices. And will find the truck and land, I guess, on top of it or
it's on top.
off the winch or something like that, and you set it up for the next package, and it
you
goes
just have them preloaded where it gets 3 or 4 in a row that are close by, and then the car can service one side of the street and the drones can service the other side of the street. So I like the idea.
I do too. It's a really good picture in my mind.
Yeah, it makes way more sense than that that Amazon blimp we saw a couple years ago that had 500 drones pop out of it, and it was that seems outlandish. But this idea, it seems much more realistic, and it seems like it's becoming more of a real thing. They've got their delivery vans already in production. I think Walgreens or CVS has 1,000 on order, so they're going to start delivering medicines and drugs through this. So I like the idea. I'm cheering for them. So we got, I think we have time for one more article here, and we're going to talk about these Trans-Pacific rates. This one comes from Greg Miller. The rates are going wild from China to the U.S. West Coast, especially. They continue to climb and climb higher, and this is really not because of too little vessel supply, but because of increased demand. The U.S. import demand is surging, not despite of the coronavirus, but because of it. I'm gonna murder this name. I'm so sorry. Nereus Poshkis, who is the global head of ocean freight at Flexport, said that Trans-Pacific eastbound market is going crazy. He says the current dynamics are unprecedented. They actually expected Flexport and their customers expected consumption would go down due to the pandemic, but the opposite has happened. And that really doesn't come as a surprise to me or probably to Kevin, because we've been following that Bank of America data like a hawk every week. And we've seen that people are filling their lack of service spending with more goods spending. So people are buying more stuff. They're buying more stuff online. Poshkis actually says that 80% of Flexport customers are growing year over year. So it's good for Flexport. It's good for especially shippers that are positioned to sell online. But that being said, he doesn't believe this is sustainable. Right now, rates are flying. The Shanghai containerized freight index from China to the U.S. West Coast was at a little over $3,100 per foot, per 40-foot equivalent unit. And last week was a little bit less, was at $3,167. But these are the only 2 weeks those indices have ever topped 3,000. So rates are very high right now, but he's expecting August to be the peak here. He does believe that after Golden Week, which is a month and a half away, it's that first week of October. He's expecting things to slow down and calm down after that. And
while you said it's not sustainable, probably won't go back to $1,200-$1,300 a container. It'll still be elevated. It just won't be at these record levels. Right. And you're exactly right. That's what we've seen in the Bank of America data. That's what we're seeing in Sonar on freight levels. Yep. Is that while we're spending less on travel, restaurants, hotels,
even haircuts and nail salons, all those services and gas as well.
All those services, we are still spending. We are still spending. We've shifted that a lot of home improvement. That's been like the star industry or sector of 2020. Everyone's stuck at home and doing home improvements, and that's been up 25 to 30% year over year in the spending categories consistently. It never dipped. Everything else kind of dipped, but not that. Well, grocery, essentials never dipped either. Right. But department stores were down 50%. That was another thing that they were shifting money toward other purchases, and it kind of feeds into that narrative. Whether after Golden Week, what we see, I'm not really sure. Yeah. But right now, it makes perfect sense, especially what we see in OTVI or the tender load volumes. That are shooting off right now is that freight is moving. Yeah, freight is definitely moving. Again, if anybody in the audience has a differing opinion on that, we'd love to hear what you think is going to happen after Golden Week, especially if you're in that ocean industry. It's going to be, I think we got a wild ride ahead of us towards the end of the year as we try to stabilize and find everything out. So on Facebook here, Omar Gonzalez talking about the B1 drivers. While B1 drivers do drive down rates, we do need them. And certainly we do, yeah. And then Chris Marciniak says, I believe each port should have hubs and a cross-dock and or trailer swaps. This would keep the drivers in their own country. I believe that added costs would help security and drivers in their respective country. It would delay transit times, but help. Probably not possible with volumes, but starting a conversation, it also helps U.S. drivers not to lose loads.
Well, that's a good point, because we can talk. We're going to talk to Ryan Houfek about chassis pooling and things of that nature, because he works for Direct Chassis Link. He's going to be coming up here in a few minutes, so maybe we can pose that question to him.
And I think that there's quite a bit of that already going on. I mean, you'll see Mexican-based drivers pull loads over the bridge to the terminals along Mines Road that I was telling you about a few minutes before we went on air. But they don't really go outside of Laredo, if we're just looking at Laredo. But going back to hot volumes, the freight market's still heating up, and we have our Director of Freight Market Intelligence with us now, Zach Strickland, to talk about what's going on with volumes and capacity.
Yeah, Kevin. So, volumes continue to increase, throughout the week. I think the big question is, how long does this last? Is it sustainable? I think the obvious answer is no, it's not sustainable to this extent. But the fact is that we saw tender rejection rates decline for about 5 days in a row until today, when they jumped back up again and jumped back up over 22%. Again, still below that 2018 threshold, but the fact is that volumes are so elevated that the capacity tightness is probably going to persist for the next couple of months at least, and it does not appear to be slowing down to this extent. I think there's some level of, there's just so much freight moving in the country right now, and then again, we're hitting this ceiling where carriers probably don't want to reject a lot more freight than they're already doing. We were talking about this earlier about how there could be potentially a little bit of a ceiling effect here, as carriers are saying about 1 every 5 to 1 every 4 loads, maybe as much as they really want to, really jump into the spot market with, especially if you're talking about 25% of their overall volume moving on the spot.
So Zach, let's shift gears to rates here for a moment. I've been watching that DAT spot rate data in Sonar, and we just continue to climb off that bottom in March and April. It's just steady up and to the right. I think we're about $2 a mile here. Where do you expect things to go from here? Can we eventually climb over that 2018 peak?
Yeah, I mean, we're over 2018 in terms of rejections, in terms of July, but we haven't hit that peak value of 25% that we had in that June of 2018. But the fact is that I think that we're seeing some resistance, but if volumes continue to climb like they are, I think that we are inevitably going to hit another June-style peak, about 26%. It's just really a matter of time, and how long can these volumes continue to grow? I mean, you guys were talking about maritime. Maritime tends to be a pretty good leading indicator of what goes on in the freight market domestically, especially on the surface side. But there's always the big question about what's the lead time between, transitioning from that ocean container to a warehouse, then onto the surface transportation. They still have a lot of capacity on the rails. There's still, even though year over year we're looking at rail volumes on the container side being on par with last year, there's still a lot of room on those rails, and I'm sure the rails will take it. But that being said, service is also a concern. So right now, there's obviously a lot of freight out there that needs to be moved in a timely manner. And as these warehouses are filling up, they're going to have to get somebody to bump those docks. So I do think that we will still see a little bit more of an expansion in the tender rejection rates. And, carriers, especially since we're operating off of 2019 style contract rates, it won't be that hard to convince these carriers to start hauling some of this spot market freight.
You're exactly right. Amanda Miller, account manager of Freight Sales. Rates are through the atmosphere, and that's what we're seeing as well. And then Thomas Smiley, rates are crazy and definitely helps the broker. Customers are just more understanding right now. So we're certainly seeing the rates explode higher. And we've been talking this week, OTRI or rejections have kind of flattened out, but that doesn't mean that capacity's loosened up at all, because there's probably a ceiling for OTRI in some respects, right, Zach?
Yeah. I mean, that's kind of the idea, is that we're seeing this kind of leveling out. But it doesn't mean that capacity is like returning to the market en masse or anything like that. It's just this, when you're talking about things that are, steadily climbing, you have these little periods where you get a little bit of a reprieve. Maybe some carriers are finding some balance in their networks more often than not at this point. Maybe some of these volumes are being a little bit more consistent, so they can actually rely on them and plan on them being there. Whatever the reason, though, carriers are certainly not going to want to start rejecting more freight to put them in a bad position come bid season. And we are starting to approach that time of year where we're starting to see a little bit more contracts getting renewed. They're going to have to start bidding on things. So they don't necessarily want to leave that bad of a taste in these shippers' mouths, knowing that 80 to 90% of the time, they do not have the leverage in the market.
So Zach, before you go, can we talk a little bit about some specific markets? It seems that things have changed a little bit from last week to this week. Last week it was, or this week it seems that some of the bigger markets are stabilizing. Some of those carriers may be noticing about the great rates out west. They've been kind of rebalancing their fleet out west. Can you tell us a little bit about different market dynamics between the big guys and the little guys?
Yeah, so this week we're actually starting to see, some of those larger markets like Harrisburg, Los Angeles, Atlanta, Joliet, they're all kind of leveling out on their rejection rates, whereas we're seeing markets like Lexington, Jacksonville, I think El Paso actually just started to recover a little bit, but some of these smaller markets, Twin Falls, Idaho, the Pacific Northwest, starting to heat up a little bit. I think what we're seeing is a lot of these carriers have found that they can go and get some of this high-priced freight out of some of these larger markets, so they've already started to really try to buy in and get a lot of inbound freight, even taking discounts out west, just so they can haul some of this high dollar freight off the West Coast. So it's creating a little bit more balance in some of these larger markets, which I believe is really what's behind some of the rejection rates coming down this week, as carriers have figured out they're starting to pick and choose where they want to go. And over time, that, of course, creates these little surfaces of balance in some of these larger markets, as, of course, they can get there. They know these larger markets are going to have consistent volume, and they can get paid to go there. So the high rate of success really is attracting a lot of the carrier capacity.
Thank you very much for those insights, Zach. And we have the Carrier Summit coming up August 19th and 20th next week. What will you be talking about?
I think Zach has stepped away from the mic, so we're transitioning into our lead economist, Anthony Smith, is going to come on and talk about jobless claims, which we're actually under 1 million for the first time in 21 weeks. I'm sure Anthony has a lot to say about this. Anthony, are you surprised at all about this number finally falling below 1 million?
Not too surprised. I think if we looked at the trend, it's been slowly but steadily declining. Of course, it's quite a milestone. I think quite a wild milestone if you were to ask us about this even nearing the highs that have reached just a few months ago. So, of course, it's under 1 million, so it's a huge milestone, but it's still a lot of work to be done. When we're looking at continuing claims, those also fell off over the last week. Those are those individuals that are filing for continued claims. This isn't their first initial claim for unemployment benefits under any kind of PUA programs or just the regular programs overall. And so when we're looking at jobless claims, I think early on we mentioned that this is all incentive driven, right? So when we saw that the initial jobless claim started to really pile in, this was also coinciding with, of course, the shutdown of the overall economy, with many businesses and services, but also with the increased benefits. And I think you and I actually had a FreightWaves Now segment where we talked about some of the incentives built around that. We have incentives for individuals to remain at home and incentives for those who are not able to work remotely and not able to shelter in place safely, to remain at home and not risk spreading the virus or putting themselves at risk. And I think when we're looking at the expiration of those benefits being put out, that may create an incentive to have individuals to return to the workforce, because now they're without a lot of benefits that they've gotten accustomed to over the last few months here.
Yeah, there was another thing involved in that executive order that President Trump signed, I guess it was a week and a half ago now, where he deferred payroll taxes as well. So you kind of have another little an incentive to get back to work, so you get paid more because they're going to defer those taxes. But let's talk about a vaccine here for a moment, Anthony. A lot of economists are saying that there won't be any major recovery in the labor market until we have that vaccine. Are you under that impression, or do you think that we can get there without a vaccine?
I'm definitely under the impression that the course of the virus and the containment is definitely going to dictate the course of recovery in the overall economy. So I'm definitely in that mindset. I think a vaccine definitely will speed things along. I think as we start to continue to reopen, I think individuals are going to be much more potentially careful, as we saw a little bit of a reopening in July and how cases started to spike. So I think when we look at different industries, when we're looking at different sectors, I think each sector is probably going to have to assess their individual liabilities on an individualized basis and really kind of attack how they plan on maintaining, containing any type of spread within the workforce. So I definitely think that the virus will dictate the course of recovery, and I think definitely a vaccine will accelerate any kind of recovery attempts here.
Am I wrong to think that because of automation and robotics and a lot of industry and kind of this accelerates that trend that some of these jobs will just never return?
Definitely. I think when we're looking at the overall industry, there's going to be a long-standing and permanent job losses for many. There's going to be, as you said, jobs that are not going to return. There's going to be individuals that are going to have to either find a new skill set, go back into some kind of workforce where they are not doing or performing the same task as they once were, because there's going to be a lot of automation, as you mentioned. There's some industries that are just completely altered altogether. I think when we're looking at airlines, for example, there's going to be countless pilots that are going to have to really kind of find a way to maybe reaccess or use their skill sets. So I think definitely when we're looking at this overall job marketplace, there are going to be permanent losses, I think much larger than what we were originally anticipating on that side of things. And I think this virus has definitely accelerated the trend for a lot of industries that may have been on the cusp of innovating or on the cusp of kind of tailoring to maybe an e-commerce or a socially distant world. And so I think this has definitely pushed that needle forward much faster than many were expecting.
Anthony, how long are you modeling unemployment to be in this 8, 9, 10% range? I mean, is it even fair to model it? Is it all going to be based solely on that race to the vaccine and the containment of the virus, or is there other factors here that you feel confident in modeling out?
I definitely think we're looking at unemployment being in that 9, 10% range. I think definitely, again, it's going to come back down to the containment of the virus, but I definitely expect if we continue to see these jobless claims kind of reducing, I definitely anticipate unemployment rates to follow as well. I think in the second half, I wouldn't be too surprised if we were to see unemployment rates dip down into the 7 to 8% range. Still very, very high, but I think if we were to get any type of vaccine, and if we continue to see the slow but steady progress on those jobless claims, I think without any kind of wild spikes in cases or resurgence in cases, I wouldn't be too surprised to see the year ending around that 7 or 8% unemployment rate.
So, Anthony, what's coming up next week? What's the next data set that you are tuned in and ready to open up and digest?
Definitely. So over the upcoming releases I'll be excited to look at, of course, are retail sales and industrial production, which will come out tomorrow morning. Of course, these series are a bit lagged in our ever-changing world, but it's going to be telling to see how retail sales were over the most recent month throughout July, and also looking to see what the latest will be for industrial production. I think many are expecting, I know I have been expecting manufacturing to be one of the few industries that may be able to kind of come online quickly or kind of respond quickly or rebound to some extent. Of course, this was an area that was weak before the pandemic, but as we alluded to earlier, this is also an area that is open to automation. I think the biggest drive is going to be that incentives around really kind of driving business investment on the more upstream side of things, and of course that demand when we're looking at companies looking at capital expenditures. I think there has to be adequate demand and adequate incentives for these companies to kind of spur that kind of activity on the manufacturing side. So definitely looking forward to retail sales and industrial production.
I'm going to put you on the spot. Final question, put you on the spot. Do you think retail sales beats or misses expectations?
This is like a segment off of your great quarter, guys.
It is, yes.
I definitely think retail sales will, I think it might miss expectations this time around. I do have higher hopes. I think this might be the one of the last months that we might see some significant upward movement for industrial production. I think industrial production in next month's release is going to have a downward movement. Just based off of the capacity levels for flatbed trailer types, but those are my expectations for retail sales and industrial production in the coming days.
Perfect. Thank you very much for your insights. As always, Anthony Smith, our chief economist here at FreightWaves.
All right, so we got John Gallagher on the line, our chief Washington correspondent. He's going to be talking a little bit about that HOS extension from the Fmcsa. I think he's on the line now. So, my man John, can you give us the latest?
Yeah, hey you guys, thanks for having me on. Regarding that extension, so Fmcsa, since this was initiated this national emergency was initiated back in March, they've been doing this series of extensions, and this latest one they've added back an exemption for paper, food, and other grocery items, and I'm assuming I didn't get a chance to talk to someone there, but I'm assuming that has to do with the uptick in the COVID cases in recent weeks. So they felt necessary to, in addition to the medical supplies and the protection gear that trucks have had the ability to move back and forth without the HOS rules applying. Some of the rules applying, they've added these two back as well, with an anticipation of that's going to be part of this. Food, grocery, paper products are going to kind of maybe make a resurgence. So I think they were trying to get ahead of it there. So that was the reason for that. And just to stick on the hours of service for a little bit, I just wanted a quick update. A couple of safety groups and the Teamsters put in a petition for reconsideration on the hours of service changes that went into that the Fmcsa rolled out in June, and they're supposed to take place September 29th. Now, soon the Fmcsa is going to have to rule on these petitions, and all indications are they're going to. It's not going to have an effect. It's going to let the rules are going to still go in place come September 29th. Now, the thing is that the battle there between the safety groups and the Teamsters is not over, because the expectation is that they'll after that happens, they'll file in federal court to try to stop the rules from going into effect. So it's going to be interesting to see the timing on that, when the Fmcsa rules on the petition for reconsideration, and if these safety groups file their petitions in time to kind of halt the HOS from going into place. I just wanted to kind of quick update on that.
Yeah, thank you very much for that update. That's an ongoing situation that you're certainly monitoring there in Washington, D.C. We also have the infrastructure bill that's been moving through Congress, and I forget the exact name of it. I know John knows it. But it's it has the insurance amendments in it and a couple other items that are directly impacting trucking. How's that moving along the lawmaking process?
Yeah, the lawmaking process is it's at a standstill right now, and no one's expecting that House bill that you were talking about was from the Democrats in the House, and no one's really expecting that to happen because there's a stalemate between the Republicans and Democrats. And so what's likely going to happen there, Kevin, is it's going to September 29th. Again, September 29th is the date here where the previous law, the FAST Act, basically expires. So the likelihood is that will scrap the bills in Congress to re-up that, and they're going to have to start all over again, basically. So those provisions that we talked about, raising the insurance premiums to $2 million, which was obviously a bad thing for a lot of truckers, but and also there was also things they were looking forward to. There was the hundreds of thousands of dollars for truck parking loans. That's probably going to have to go away basically, and they'll start over again.
Yeah, some political jockeying there on that bill. So let's hop back to the extension from the FMCSA for a moment. This looks to be another one of those 1 month extensions. Are you expecting to get another 1 month extension when this expires? I think it's in the middle of September.
Yeah, exactly. It'll go on, and as long as the national emergency, the president's national emergency is still in place with regard to COVID-19. So they're basically keeping those going as long as that emergency order is in place. And I don't know. That doesn't look like that's likely to end this fall either, based on what's going on around the country on the new cases.
So the hours of service exemption, this emergency exemption, what exactly does it do for hours of service? How does it adjust it?
It adjusts it because it basically allows truckers more flexibility past those certain restrictions that they have now on the 11-hour and 14-hour days. They can move past those. Now it doesn't allow them. There are restrictions on that. I mean, they can't. If they feel fatigue, they have to be able to. By going past these hours of service, they have to let their employers know that they're tired, and then the employers have to give them relief from that. So it's not like these carriers can just let them drive as much as they want. And there are other things that still apply to it too, like the drug and alcohol. They still test for they can still get pulled over for that. You're still responsible for driving while intoxicated or under the influence too. So it's not like a sweeping exemption from hours of service.
Exactly right. Now, you also had a recent article about the United States Postal Service and its overhaul. Can you describe that a little bit for us?
Yeah, sure. It was basically when they're reporting on their fiscal third quarter earnings this past week, they talked about this overhaul reorganization. So it's basically it's going to allow them to start moving on plans to inject more operational efficiency into the agency, and they're starting that with like a management hiring freeze, and early retirement for the non-union employees. They said that this was not going to affect like the rank and file employee cuts, the people that actually deliver. But that could change as the effects of the pandemic linger on. They didn't rule that out. And while there's been this uptick in parcels due to more people buying stuff from Amazon and more parcels, because Amazon works with the USPS too, they did get an uptick in volume, but first class mail revenue is down, and that's where they make a lot of their money. And they also have pensions that they need to fund too. So it's in real. The Postal Service is in trouble, and this is the start of Louis DeJoy, the new Postmaster General, who came from XPO Logistics. This is the start of his trying to revamp that. And of course, there's political ramifications to all this as well that we've all been hearing about in the news too.
Of course, right? There's always political ramifications. So we had an article today on FreightWaves, OOIDA, and the Teamsters, and those are top headline this morning. The OOIDA, the Owner-Operators Independent Drivers Association, right, is, they're involved in a series, and that's what they do. They're involved in a series of different regulations, lawsuits, things like that. They're also pressing regulators on detention and truck parking right now. Could you fill us in on the details of what actions they're taking?
I'm sorry, Ken. This is you're talking about OOIDA.
OOIDA, yes. And
Yeah, well, the article this morning was, speaking of, I don't know if you've read it, but the Teamsters and OIDA filed a joint letter to the U.S. The International Trade Association, basically asking them to investigate the Mexican trucking companies. They think that because of the lack of regulation on Mexican-based truckers, that they are coming into the U.S. and they literally, quote for quote, said they are endangering the U.S. public and they're endangering the workers of the American trucking industry. I think Kevin was just seeing if you had any thoughts on that. Go ahead.
Any thoughts on that? But another action that OIDA is taking is on detention and truck parking, and it's a recent article that John had written.
Right. Exactly. Because there have been in the bill that we were talking about earlier, the House bill, there were provisions in there to deal with detention and truck parking. And as like I said, that could all go away because the OIDA and ATA as well. That detention is a big issue because it's costing them a lot of money, like millions of dollars, and they've done studies on this. So there was an FMCSA meeting a couple of weeks ago where this came up again, and OIDA was pretty outspoken about why detention, as that FMCSA should be looking at detention as a safety issue too, because it basically when drivers, especially like owner operators, are out there trying to avoid detention, they see that as like a safety issue. So they want FMCSA to jump in on this more than they have been. ATA sees it as an issue too, of course, but the owner operators are really outspoken against it.
Yeah, they definitely are. Thank you so much for your time today, John. You can find all of John Gallagher's articles on FreightWaves.com. And if you want to reach out to John directly to become a source, or if you have some information on something that would be a great story, how do they reach you, John?
You can reach me at jgallagher@freightwaves.com, or and also on Twitter, it's John A. Gallagher 1.
Thank you very much.
All right. Have a great weekend, John.
Thanks, you guys. You too.
All right. So we got Ryan Houfek up next. He is the COO at Direct Chassis Link. He's going to tell us a little bit about what Direct Chassis Link does and what kind of problems they're trying to solve. I think we've got him on the line here now. You can come on in whenever you're ready here, Brian, and just come on in and give us your elevator pitch about what Direct Chassis Link does.
Kevin, Andrew, can you guys see me?
Yeah, okay? We hear you great, man.
Yes.
Loud and clear.
Cool. Good deal. So we're the largest chassis owner and pool operator in the country, and we have a fleet of well over 200 and some thousand chassis, most of which are on the marine side. We also operate 53-foot chassis on the domestic side, so we essentially service all the marine terminals, coast to coast, all the rail ramps, coast to coast. And are really just trying to fundamentally service truckers and be there for them every single day with a quality asset. And so hopefully today we'll talk about what we're up to, and then kind of what some forces out there are trying to do to undermine what we're working on.
Yeah, let's start out with what you guys do, and for our viewers out there who don't really operate in the ports, can you give us a 30,000-foot view of how the chassis partner and network works?
Yeah, so I mean, like I said, we've got these. Essentially, we've got chassis pools. Right? So when you have assets, you can pool assets. Chassis are essentially made available to truckers to rent them by the day. We've got 135,000 marine chassis coast to coast, concentrated, of course, in LA Long Beach, and all the major ports in the country, and again at all the railroads. So effectively, truckers can kind of, without letting us know, they show up, they grab our chassis, and we charge them by the day. We service the truckers, we service ocean carriers, service all the stakeholders in the supply chain. There's we're DCLI. We've got a couple of competitors, and we all operate competing pools, and we try to take care of the truckers and their customers that they serve.
So Ryan, in the article, they speak a little bit about gray chassis pools, and I had never heard that term. Can you just give us an explanation of what a gray chassis pool is? Yeah,
I mean, so there is a kind of a movement to say, hey, there's DCLI's pool, and then they've got kind of
brand X's pool and so forth. And what they'd like to do is to take these competing proprietary pools and kind of smush them all together into a single model. I say they take our fleet and then smush them all together and pool those assets and offer them your quote unquote gray, meaning it doesn't matter if it says DCLI on the side or track or whomever, it's irrelevant. That it's gray, kind of is the concept of that pool.
So, what are some of the challenges of working that plan out?
Yeah, so I think the first thing is kind of pointing out who they are.
I was going to ask.
So they are the ATA, and NACPAC is kind of partnered with the ATA to force our business out of our proprietary fleet and into these kind of put all the competitors together into these pools across the country. That's sort of the goal. And so let me talk a little bit maybe kind of what they claim is driving their efforts. They claim is that the current pool model lacks choice, and that only kind of a gray pool with, and this might get a little technical, CCM, which is sort of a neutral third-party pool provider in some regions. They want a gray pool with CCM and these open choice rules, and only in that model can there be chassis quality, can there be lower chassis rates, and ultimately trucker choice, right? And ultimately, this is kind of deceptive at best and frankly entirely disingenuous. For many years, we've seen that where the CCM gray pool model operates, it so dilutes the incentive for investment and for the asset owners that ultimately they contain the poorest quality chassis in the country. At the same time, they have these kind of CCM, and the pool manager lacks skin in the maintenance game, if you will, meaning they have the highest operating costs relative to competing pools in their respective regions. And they fundamentally lack the motives to serve their customers. And ultimately, the asset owners, like DCLI, are just sort of, their assets are part of this broad pool, and they have no ability, we have no ability to distinguish our own assets or our service. And so it's already been proven to be kind of an inferior model in its fundamental service to truckers and to ocean carriers and to shippers. And as for kind of this quote unquote trucker choice, this is like marketing spin at its finest. Today, truckers and shippers have got more, real choice than they've ever had. And so, for example, they can use one of several pools that operate in the markets. They can, truckers can fleet their own assets and service customers and use the pool and use their own chassis. And frankly, I know, sorry if I'm kind of on a soapbox here, but if my pool has, low quality assets, high prices compared to the alternatives to my pool, truckers are going to kind of take a right instead of a left in a depot to grab a competitor's wheels. So anyway, the ATA and NACPAC, they're introducing these neutral gray pools that ironically reduce competition and can in fact lead to a full-on monopoly. We saw that, right? So when NACPAC attempted in 2018 to create what was called the Southern States Chassis Pool in the Southeast, they used this quote-unquote trucker choice and sort of as a kind of a coup for the region. And as soon as they got the region, trucker choice was gone. All right, it didn't work. Cooler heads triumphed. Shippers sort of revolted. Carriers revolted. We did, of course. And frankly, they're at it again. And this time they have a powerful ally in the ATA. And they're not just focusing on a region. They're going national via politicians in D.C.
So Ryan, in the article, they talk about how shippers argue that the chassis industry is highly fragmented, even though it seems like there's only 4 or 5 really major players, DCLI being one of them. Why do they feel like it's fragmented? And in your mind, what would be an ideal situation? What are the ideal number of players to give the most efficient and best use of service of the chassis?
Yeah, so kind of the argument is that if you have this highly fragmented model, then it's really inefficient for truckers. In other words, they have to go get that chassis from that pool for that container, and then they got to go to this one over there. And it's sort of like hyperbole, on steroids. Basically, what you need to have in any given market is critical mass. You got to have enough chassis so that regardless of what rail ramp you're going to or marine terminal you're going to, there's adequate chassis within a pool to cover it all. And so we've got that. We've got, like I said, we've got 135,000 chassis. We serve 5 of the largest ocean carriers in the world. So, and more importantly, our depot network, what's called start-stop network, is huge. And frankly, that's the show, right? Is that truckers have all kinds of options in their day. And so that when they dispatch their drivers, they don't ever have to go unhook from this one and go hook to that one. And so anyway, the sort of fragmented argument is way overblown. There's like 2 or 3 in any given market, all of whom have great critical mass and give truckers, choice and options. And sort of those competing pools have to compete, right? And the forces of market competition are all over them. Like if they're not meeting their customers' needs, then somebody else will. I mean, you get that premise.
Yeah, of course.
Yeah, you're exactly right. So Ryan, you have a really good view into port activity right now. We've seen certainly on FreightWaves.com, Greg Miller has rates are exploding, from China to the U.S. What are you seeing in port activity, imports and exports? Are we in a hot market right now, or is it cooling off?
Yeah, I mean, anybody who manages capacity, who has assets and manages capacity, has a hard time with the so-called black swan events. Mm-hmm. We've seen them with labor disruption. They can cause them. The trade war has caused these wild swings, and now not to be outdone, a global pandemic. And so what we're seeing here with this particular situation is we went from dozens and dozens of blank sailings in a given month for kind of March, April, May through June, and then almost overnight we've gone 180 to extra loaders, sweeper vessels, whatever you want to call them. And so it's kind of capacity has a hard time turning on a dime. So to us as a chassis provider, our pools are certainly being stressed by the 180. But you guys have got economists on staff. I'm actually interested in hearing what they say is going to happen in the Q4. But right now it's hot, and we're doing everything we can. We're fixing chassis as fast as we can, encouraging customers to bring them back and not sit on them and so forth. But it feels pretty white hot right now.
Is it the same? Is it the same story in the on the rails in the intermodal markets for containers? Are you seeing
so it's there's just a bit of a lag. So it sort of hits LA, and then as it either transloads in the Inland Empire or gets directly loaded to rail for IPI movement, you have kind of a weaker change in delay. So LA gets hot, and then you start to see the interior markets get hot, and or for all water services in Savannah and Charleston and Norfolk, et cetera, they start to get hot too. So it's flowing all the way through, but we're probably almost a month deep in this, and so it's everyone's kind of having a big month.
Well, that's good to hear. We have a passionate Ryan Houfek here for us as well. So we got to wrap this thing up, Ryan. But thank you so much for your conversation. If people want to learn more about DCLI, how do they reach out to you, my man?
Yeah, I mean, call me. Mine is ryan.houfek@dcli.com. I mean, I am excited about what we're doing. We're not there yet. We're going to get all the bias-ply tires out. We're going to be 100% radial. We're going to be, every chassis for every driver, everywhere, every day. That's the end game for us. And so let's kind of let capitalism work its thing and avoid sort of federal, oversight, which has massive unintended consequences. That's kind of my closing comment there, and I appreciate the venue to make that.
Oh, man.
Anytime.
It's here for you anytime, my brother. Have a great weekend, and enjoy the rest of your week as well.
Thanks, Kevin. Thanks, Andrew.
You're welcome, sir.
Thank you, Ryan.
All right, so let's chat it up a little bit. We got the State Carrier Summit coming up next Wednesday and Thursday. Let's give the people some details.
I know. We've been talking about it throughout the hour. Let's get to the meat of it now. So FreightWaves and Seat My Trucks are excited to present the Carrier Summit on recruiting, retention, regulation, operational efficiency, and maintenance. Expect to hear from trailblazing trucking pioneers who have impacted the way we do business today and the way we will do it tomorrow. Get the latest updates on how truckload carriers are adapting to the new world we live in. And this is definitely a new world in 2020, isn't it, Andrew?
No doubt. So we've got some got some featured topics here for you. We're going to have the future of CDL training, have driver pay roller coaster, HR landmines, minimizing driver turnover. We're going to talk a little bit about that M&A activity, which I'm sure that you and I and Ben Gordon will talk a little bit about as well during our Great Quarter Guys, which will go on, I think, on the Wednesday. I'm not sure when it is, but
I think it's Thursday at 10 a.m.
Got the full agenda coming soon, so we'll get that out to everyone very soon. But yeah, it's going to be.
You have a segment on.
I do. Yeah, I have
what?
I have a segment. Me and Sadie Church are going to be talking about. We're talking about attracting younger drivers to the market, why that's so important, how difficult it is, some strategies to doing so. She is the absolute queen of this. She has started when she was at Riverside. She started this brand ambassador program, which basically gave these people the ability to make their own videos, these younger people in trucks, while they went around the country, seeing the country and being a trucker. And one of her brand ambassadors actually has 60,000 subscribers on YouTube. They get like 25 drivers per week from this program. So she is very good at this. I'm very excited to get those strategies out of her brain and onto the airwaves.
Yeah, and I have a session with David Robinson, who's a partner in HR and labor laws at Scopolitas law firm. We're going to talk about kind of recruiting and the screening process and what carriers need to be aware of.
Oh.
Yeah, and then also Andrew Brberick and Nate Robert, who are the founders of Baton, who's
that's right.
a trailer pool final last mile for full truckloads in major metropolitan areas, and they're attacking this business model. Really attacks eliminating the waste in detention.
Right.
So that's an awesome segment as well. And then again, we're going to do a live Great Quarter Guys with Ben Gordon. And that's always exciting whenever we have Ben on the show.
Yeah, I mean he's a very sharp guy. Cambridge Capital in Palm Springs, Florida. So we'll have him on. We're going to talk M&A. We're going to talk probably going to talk some e-commerce. The future of malls, I think, will be interesting. He's very in tune with that whole play. I think Amazon is now. We had that big news that Amazon's going to be looking into buying or renting out some of that mall space, some of that dead mall space in the middle of America to build DCs out of. So I'm sure he'll have a lot to say about that.
And if you're not familiar with Great Quarter Guys, it's all long shorts, buy or hold type of that. We debate whether we're a fan of the topic or for a bull of it or a bear of it. There's many ways to say it, right?
Yeah, it'll be fun.
All of our virtual events, all FreightWaves virtual events, attendance is free, and there's no pre-registration required. Come ready to learn with the best and experience what the future has to hold for the truckload industry.
I mean, there's no cost, people. There's no cost to this. You're going to get all kinds of great information over 2 days. You're going to be missing out if you're not there. You will be a square if you're not there. It'll be very fun.
Definitely. And phenomenal networking opportunities for a virtual conference. We'll have a dedicated Slack channel, or is it a channel? Right?
Yeah, it's a Slack
channel that we'll have open, and everyone gets on there and comments in real time on the sessions and our sponsors' booths. Open up to that as well.
Yeah, we did a survey after our first virtual event back in May, and we asked people what it was like, the differences between an in-person and a virtual event, and overwhelmingly people said that actually networking was even better at this virtual event than it was at most of the events they go at in person. So you're gonna meet people, you're gonna find clients, you're gonna find customers, you're gonna be a customer of somebody. You got to be there next Wednesday and Thursday. It's gonna be great.
Definitely. I think I usually get about 100 LinkedIn requests.
Yeah, you just go ahead and you can expect a big one.
Two of that conference, and you can also rewatch some of our past virtual events on live.freightwaves.com. This includes our recent 3PL Summit and then our big at-home event that we had in May, filled with great sessions, all of them. And you can also, besides live.freightwaves.com, you can find them on Fmcsa, which is our podcast network. And you can download that wherever you listen to your podcasts at.
All right, so real quick, what we got going on for the rest of the week? I think tomorrow on What the Truck, the Dooner and the Dude will be back. They're continuing their Summer of Robotics and Play It Forward series. They're going to have TJ Fanning, the VP of Growth from SVT Robotics, and Andy Hedrick, co-founder of TK7 Products out of Oklahoma City. Aaron Dunn's also going to be there, Director of Sales and Marketing at PDQ America. And then one of our newest FreightWaves employees here, Adam Robinson, who's our VP of Product Marketing and SONAR.
And then yesterday, and you can find all this on demand, yesterday on Put That Coffee Down, the Freight Sales Podcast, Dune and I had Steve Ferreira from Ocean Audit on, talking about pitch decks and presentations and how to clean those up and make them as sleek and usable as possible.
That's a busy man, Mr. Steve Ferreira.
He is. He definitely is. And if you've missed any of our shows on FreightWaves TV, you can check them out on demand on FreightWaves TV, on Apple TV. You can go to tv.freightwaves.com. You can go, where else can you go? Freightwaves.com. You can
find all the stuff there.
On the
Make sure to stay tuned there. I've rather enjoyed myself here. tv.freightwaves.com. Sorry, I'm getting some production notes here, but I've enjoyed this segment with you, Kevin. I mean, I'm okay if Michael Vincent has a couple more secret agent days that I can come and fill in. But this has been a great hour, my man. I guess we'll see you all back again next Tuesday right before the Carrier Summit. You guys enjoy yourselves. Have a great weekend, everyone.